What's Apple's stock price? Stock price constantly change. There have been stocks that have sold for over $100 a share for up to a year. Now, for example, Apple stock price constantly changes. It has been at maybe $100 here, I think, for over a year. Now, as of August 30th, 2021, that was the price. So if you're just starting out, you want to commit to purchasing a chunk, not a whole share of the Apple stock, just a portion. Maybe a portion. A portion is called a fractional share. That's what you want to buy, a fractional share. Because if you're just starting out, you might not be able to just cough out $100 to buy one full share, which is a lot of money to some people. So you can buy a fractional shares. Some brokers makes it possible, or they make it possible for you to buy fractional shares. Some brokerages, so like the Fidelity and a few ones that I mentioned earlier on, Stash, Shark Swap, and a few other brokerages, you can actually buy fractional shares from them. Even Robinhood is another, I'm giving you some other names that you could use also. So you look at how much money you have to invest in your stock. Okay, so right now you want to ensure that you buy a fractional shares like Stash, Robinhood. They all allow you buy these portions of traditional shares. Now, what's your investing strategy? When you're ready to invest, you can opt to invest a lot of money at once or small amounts over a long period of time, depending on your dollar cost average. This decreases your risk and can help you pay less per share on the average. Now, how about other investments? If you have other investments, you want to think about how the Apple stocks may fit into your overall portfolio. Now, Apple is a large cap tech stock. As an investor, you should be aware of the other stocks that they own in the same category. Now, before purchasing stocks, you must decide your investment goals. Spend some time to think about what your investment goals are. Do you have to invest in the same level of risk, to buy large amounts of single shares in any company, because it can be particularly risky? Apple also tells you that they have substantial price volatility in the past. So that means the stocks could fluctuate, go up, go down, go up, go down at any time. So this fluctuation should influence how much you invest in Apple. I think as an investment, stocks are suited for moderate to low income earners. And because these stocks are leaders in industries, you want to evaluate how much money you spend in them. Don't ever go to a point where you begin to buy less or more stocks for a fluctuating stock. Decide on your investment goals. You must decide before you purchase any stocks. Think about what your goals are. Now, investing always has some level of risk. Buying large amounts of single shares of any company can be particularly risky. Now, you don't want to buy just one company. Some companies also note that they have substantial price volatility in the past, and it can significantly impact other factors. While past performance is no guarantee of a better future, or you can't use the past to determine how a company will operate or will profit in future, it's a key that you could use. Now, I think investments like this are suited for people that have moderate or higher risk tolerance, ability to withstand volatility, and long term. Now, because these are leading companies in their industries, so they can make astronomical profits at once or drastic losses at once. Because of this, you need to be careful and be sure that you are spreading your risk across board. The benefits of spreading your risk across borders, investing in multiple companies at once, is that if one is doing badly, the other one is doing well, you are in no loss of any kind. Investing in only one will give you problem. Now, you must evaluate the stock's financial health. It's exciting to buy shares of an individual company. You can say, okay, maybe a big name like Apple or maybe Amazon or Tesla, but you should take a moment to do your due diligence. Start your evaluation by reviewing the documents on that publicly traded company's website. Now, companies like this are required to file regularly their Form 10K, their quarterly reports, and these reports detailed performance, financial information, and they are in the financial press as the earnings report or the quarterly earnings. You can find them on the company's website or by searching the SEC's database. Now, you can also make use of expert analysis to provide some insights, where you can find them on the sites I've given you earlier on, like Fidelity, the Morningstar also gives, or Forbes. Then take all of this information and the expert commentary you collect. Now, determine if that company sounds as financially sound as what you want to invest in. You also need to decide your order type. What kind of order are you going to be placing on this investment? Are you going to buy in at the best current price, or do you want to use a limit or stop orders to only purchase shares? Then once the stock falls, you sell them at a threshold. Now, since these are publicly traded companies, it can be bought or sold between 9:30 a.m. and 4 p.m. ET, Monday through Friday. However, Other pre-hours and after-hours trading, which you may not be able to access through your online brokerages, also exist. Now, this SP500 and other companies, they always have pre-hours and after-hours trading, which you may not be able to access through your online brokerage. It's impossible to access those pre-hours and after-hours trading. Now, for example, the pre-market trading hours for NASDAQ is usually from 4 a.m. until about 9:30 a.m. and its after-hours trading is from 4 p.m. till about 8 p.m. Eastern Standard Time. Now, if you place an order outside of these hours, your brokerage allows you to trade during. It will be processed once trading resumes. It won't be processed immediately. Number 6, you have to evaluate your investment performance. It's wise to periodically review the investment portfolio you are in and its performance. Evaluate the performance of other stocks, Apple, Amazon. First, start by looking at the annualized percent return. This will give you a number you can compare to other investments as you gauge how well your investment performed. You also want to revisit the fundamental data you looked at earlier to see how it develops over time. You can compare this information to other stocks or other benchmarks like the S&P 500, the NASDAQ Composite Index. By looking at those benchmarks, you can get an idea of how your investment is performing relative to certain industries or the market as a whole. Now, for you to sell your stocks, because you probably won't hold your stocks forever, you won't hold your shares forever, you need to sell them to make profit, you flip them. Eventually that time will come for you to cash out and hopefully see a nice profit on your investment. To sell your stock, just return to your online brokerage platform, enter the ticker symbol, the number of shares, or the dollar value you want to sell, and select a sell order type. Now, these generally have the same names and work effectively identically to the other types that we covered earlier on. Keep in mind that if your investment has increased in value, you may owe taxes on your profit. These so-called capital gain taxes are determined based on your income level and how long you held your stock. If you're concerned about selling and how it may impact your taxes, you might need to speak to a tax professional, a certified public accountant, and let you how to know how to. Now, how do you invest in Apple with an index fund? While individual shares are one nice way to invest in stocks, particularly in Apple stocks, it is not your only option. You could also invest in index funds or exchange traded funds. They call them ETFs. Now, you can buy these ones through your online brokerage, like you can also buy individual stocks, because these investment funds, they own hundreds or even thousands of different stocks. They are generally considered to be less risky. You know, I told you earlier on more risks, but now these are less risky than individual stocks while still offering solid long-term returns. Index funds or ETFs are an inexpensive way to gain exposure to other companies and Apple in the technology industry, and it allows investors to mitigate some risks by not having exposure simply to one security in that industry or a significant overweight. Now, what's more, because these companies make up not so significant proportion of leading index funds, you will have a hearty exposure to all this, even while diversifying the rest of your holdings. Now, over this past year, a lot of investors have been paid up because the S&P 500 has risen almost 30% during that same period. So you want to be sure that you choose the method that suits you, individual stocks or the index stocks. Individual, you're buying in a single company or in a single organization at a time, while with the index funds, as the name implies, it will be indexing a lot of or aggregating a lot of other companies and then coming back to you to give you that leeway. So, for example, if I'm investing in index funds, I can invest in Apple, Amazon, top 10 companies at a time. Someone else, the index funds are owned and managed by organizations, and then when you invest in them, they get to pay you based on their profits. They choose companies and aggregate your funds amongst these companies, while individual stocks, you're going to be buying from just one stock company at a time. So now you choose which is the best option for you, and hopefully you do a better choice than others with this information in this video. Remember, you want to subscribe to this video for more content from me on how to make money online, how to make money using your phone, your internet, and how to do different things to make life better for you. Welcome to my YouTube channel. It's FDM Learn once again, and I hope to see you in the next video and watch other videos in this same line or in this same niche. So if you want me to do a video regarding a topic you're confused about, feel free to drop it in the comment section and let me know what you think about the video in the comment section also. What more information do you need? What video do you want me to do a topic on? Let me know in the comment section. So bye bye for now, and see you in the next video.